Hi, everyone. I'm very happy to welcome you today for this fantastic session, which is hosted by FERMA. We will probably let just a few minutes for the number of attendees to be able to join on this webinar. And we will start just in a couple of instants. So let's start. So welcome to all. My name is Philippe Cotel. I am a board member of FERMA. FERMA is the Federation of Risk Management Association. We are today addressing a topic which is really interesting because it's something which echoes a number of fears and uncertainties relating to digital liability and how to work and to navigate in the frame of the regulations that are currently in applications in Europe. I have today the privilege to be supported by the cabinet DLA Piper, and more precisely, so Jeanne Dosier, partner of DLA Piper, specialized in the new technology sector and co-chair of the artificial intelligence practice in the firm at international level. Welcome, Jeanne. Aurélia Pons, counsel in DLA Piper, specialized in the new technology sector and more particularly in litigation and liability on digital products and services. Welcome, Aurélia. And finally, Alexis André, counselor as well in DLA Piper, specialized in litigation and insurance. So clearly what we really want to show in this webinar is the logic and the complementarity of all the new regulations that are currently under applications or which will come into application. But also, and it's very important, how we are able to pragmatically approach them in an efficient way in order to develop an improved risk management and an efficient way of using insurance tools. So let's go through that and see how we can really understand this topic better. So first of all, I would like you, can you please explain us what are those different regulations and how are they applied in our digital world?
Yes, of course. So thank you, Philippe. So the
next slide.
Is a policy program that has been initiated by the EU Commission back in 2020 with some targets and objectives for 2030. The general aim is to achieve digital transformation of the EU economy and society. And to do so, the EU Commission has initiated a series of regulations and directives. So we'll first give you a general overview of the content of the legislation that is usually referred to as the digital decade. As you see on this slide, in terms of policies, the digital decade has been divided into 5 pillars. The first one is the data strategy. As you know, data is the new oil. And to avoid concentration of data in the hands of a limited number of companies, the EU has adopted 2 new regulations to unlock access to data and also to secure data sharing between actors. This is the purpose of the Data Act, and the second one is the Data Governance Act. Then you have the second pillar of the digital decade, which is the cybersecurity strategy. To implement this strategy, the EU has adopted no less than 3 regulations. You have the Cybersecurity Act, DORA, for the banking and financial sector, and the Cyber Resilience Act. And there is also one directive, which is NIS2, which is the successor of the NIS directive. The third pillar of the digital decade is the digital privacy. So for this pillar, you have a regulation that I think is now familiar to everyone, which is the GDPR to protect personal data. And there is also a second draft regulation, which is the e-privacy regulation, which is meant to replace the now quite old e-privacy directive, which is mainly applicable to electronic communication services. Let's note for the time being that this e-privacy regulation has been put on hold, so we do not know whether there will be or not a second regulation, but wait and see. Fourth pillar of the digital decade is the artificial intelligence strategy. I think that if you were around during the past year, you are probably aware of the adoption of the EU AI Act in March 2024. Besides the EU AI Act, there is also a directive that has gone somewhat unnoticed. It is the revised product liability directive that is also meant to apply to AI systems, that we will see a bit later. So I'm sorry if this sounds a little bit like a very long catalog, but we're nearly there. There is only one remaining pillar, which is the fifth pillar, and it is the Digital Services Package. It comprises two regulations, the Digital Services Act, which is also known as the DSA, and the second one is the Digital Market Act, also known as the DMA. Both are meant to create a safer and more competitive online environment. And most of the heavy new obligations that have been created by these two regulations concentrate on very large online platforms such as the GAFAM. So as you see, there is a wide variety among the text of the digital decade. Some are directives, some are regulation. So some directive that will require national implementation, of course. You have horizontal regulation, sector-specific regulation, product-specific regulation. But there is one thing for sure, no industry is spared by the digital decade. Can we go to next slide, please? Thanks. Well, you may now wonder when this avalanche of new rules will hit. Many of the digital decade regulation have a phased entry into effect, so it's difficult to be exhaustive, but we try to summarize the key dates into a slide that you see on the screen. I will not go back to GDPR because I think everyone knows about it. So I'll maybe start at the end of 2024. And what you should know is that the NIS2 directive should have been implemented by all member states back in October 2024. Some member states have already implemented it, some haven't yet, so we're still expecting some laws. I know, for example, it's the case for France. DORA is fully applicable since January of this year. The provisions of the EU AI Act relating to prohibit AI systems are also fully applicable since February this year. But most of the other obligations under the EU AI Act, especially those that relate to high-risk systems, will only apply in August 2026, so you have a little bit more time. Most of the Data Act will start to apply in September this year, so in a couple of months. The Product Liability Directive is supposed to be implemented by the member state by the end of October 2026, and it will apply to products placed on the market after that date. As for the Cyber Resilience Act, the reporting obligations will start to apply in September 2026, and other obligations under that regulation will apply in November 2027. So you can expect a rather busy 2 years period in terms of getting compliant with new regulations of the digital decade.
Well, thanks so much, Aurelia. I think that your explanation really justifies why we are putting in place such a webinar, because you see effectively this accumulation of different regulations and implementations, which is of course very complex to understand. And please, for the audience, please use the tool to potentially ask your questions, but we will have a Q&A session at the end of the session. So now, the purpose of the regulation is not to create new risks. So how can you really explain us what are the consequences for the companies?
Well, to do that, what we chose to do is to deep dive a bit more into the digital decade legislation, and we have selected some pieces of legislation that we thought would be of most interest to you. And we will also try to classify them in two categories: rules that basically extend already existing risks and rules that create new risks for your organizations. So if we can go to the next slide, please. Yeah. The first focus that we chose to do is on the cybersecurity pillar of the digital decade. And I will start by presenting the Cyber Resilience Act. And then I will hand it over to Jeanne to present the NIS2 directive and DORA. So what is it that you should know about the Cyber Resilience Act? Well, first, it's a horizontal product safety regulation. It is meant to complement existing product safety regulation with new cybersecurity requirements. So I would say that for companies whose products are already subject to specific product safety regulations, the Cyber Resilience Act only extends existing risks by adding new cybersecurity essential requirements. And for other companies whose products were not subject to any product safety regulation so far, this is basically a new risk. What are the products within the scope of this regulation? Well, to be honest, the definition is quite large because we're talking about all the products, both software and hardware, including a digital element, which potentially connect to a device or to a network. So basically, any product with a digital element that is connected to something else. So to give you some examples, we're talking about a very wide variety of different products. It can be a connected dishwasher. It can be a password manager on your computer. It can be an operating system such as Windows, for example. It can be internet connected toys, internet browsers. So there are a lot of products that are within the scope of this new Cyber Resilience Act. And the new obligations that this act is creating, they are mostly for the manufacturers of the products. And they will need to comply with, so as I said before, new essential cybersecurity requirements when they design, develop, and produce the product. They will need to perform cybersecurity risk assessments, to provide a range of technical documents to the users, and to perform a conformity assessment and add the CE marking, just like for the other product regulation. And they also have a notification obligation in case of vulnerabilities or incidents identified. And these obligations, they extend during the entire lifetime of the product, once it is placed on the market. The type of conformity assessment procedure will depend on how critical the product is deemed to be in terms of cybersecurity. So this is, I would say, a very shortened version of the main obligation of the Cyber Resilience Act, which is for some creating new risk, and for other just existing risks that are related to product already existing product regulation.
So we'll move on to NIS2 and to DORA. So what's interesting with NIS2 and DORA is that they are basically the two sides of the same coin from my perspective. They are both meant to increase the level of cybersecurity and cyber resilience within the European Union. What's interesting is that you have on one side a directive. So as Aurelia mentioned earlier, it will need an implementation from the various member states. And on the other side, for the financial insurance sector, you have a specific text that is a regulation, so that is directly applicable to all EU member states. NIS2 is actually the successor of NIS1, which is an existing directive under EU law. And so why did why did the European legislator chose to go from NIS1 to NIS2? Basically, the reality was that the scope of NIS1 was deemed to be too limited, and that not a sufficient number of organizations were governed by NIS1. And so NIS2, its main and the first and foremost aim of this directive is to extend the number of organizations that are governed by it. And to do that, new sectors have been included in its scope, such as, wastewater, space, public administration, banking and financial infrastructures, research, the postal sector. So it's now pretty much everyone basically is covered by NIS2. But still, it is a directive. So it means in practice that until the directive is implemented into local laws, you don't exactly know what are, from an operational perspective, the obligations that will directly apply to you as an organization that is governed by NIS2. And as Aurelia mentioned a bit earlier, a lot of countries within the European Union, France included, have not yet implemented the NIS2 directive, which means that a lot of organizations right now are wondering, what are going to be the obligations, and most importantly, whether their existing security standards are going to be deemed sufficient in light of the NIS2 implementation. The second, of course, obvious point and concern that this raises is that different implementation depending on different countries means that you're going to have potentially different standards in different jurisdictions. And of course, there's nothing more that an organization loves is to have, different standards in different jurisdictions when you operate at a global level. So this raised a lot of questions. And of course, depending on the clients that we're talking to, we are seeing very different approaches taken on that account. Some will say, that they're going to implement the most strict implementation if that they are concerned with. So potentially might be Germany. But some say, I'm going to rather use as a standard the implementation in the jurisdiction that is where my headquarters are located. And some say, I'm going to look at every jurisdiction and comply with all of these. The reality is that it is quite unlikely that an organization is going to take a look at each and every European Union implementation of that directive and implement all of that, because that would be a massive and quite complex project to implement. But that is one very important point to bear in mind. In terms of DORA, where DORA, as I said earlier, it's a regulation, and it applies only to the financial sector, meaning financial entities and insurance entities. It's so directly applicable. And so why choose a regulation for DORA and a directive for NIS2? The reality is, and that's just my personal interpretation, but the EU legislature really pinpointed the increased dependency of the financial and insurance sector on ICT services and the importance of the consequences in case of lack of cyber resilience of that sector for the single market. And so we can understand, of course, how having one unique and harmonized set of standards would be very beneficial for the single market in that instance. And it's actually quite interesting when you read the text, which is like a dream. I really encourage you to read DORA. It's actually it's really upfront in saying that what they wanted to do was to move from the existing kind of segregated, non-harmonized national standards and regulation on cybersecurity and cyber resilience within the single market towards something that is harmonized. So the idea is actually to make everyone's life simpler by having one set of rules across the European Union. We've qualified it as extended because for a lot of the measures that it sets out, it's something that most financial and insurance entities have more or less already implemented. So a lot of the local authorities have deemed that DORA implementation would not necessitate a huge amount of work. I think, depending on who you ask, you may not have the same answer, but in the end, that's the rationale that was given. So that's for NIS2 and DORA and for the cybersecurity pillar. So if we move to the next slide. So if we focus on the artificial intelligence pillar that Aurelia mentioned, so of course the EU AI Act, unless you were hiding under a rock, you've heard about this one. So why do we think that it's a new risk? Well, of course, AI was not regulated as a technology before, but AI was widely used. So it's not a new technology per se, but the level of adoption that we're seeing, the increase of computing powers, the level of accessible data that we have means that indeed the widespread adoption has meant that and especially at an individual level, so for every citizens within the European Union, meant that the European Commission since 2018 has started working on a regulation for AI in order to make sure that what is implemented and what is deployed within the European Union is actually trustworthy AI and not something that can just do pretty much anything. And because of the capabilities of that technology, the idea was that guardrails were really necessary. Interestingly, the EU Act is also a product regulation. It's completely transversal, so it applies to all sectors, all AI systems, irrespective of the underlying technology. In terms of key takeaways, I think what's important is to bear in mind that it is not a regulation that is meant to regulate the tech itself, but rather the usage of the tech and the purpose for which you're using it. So what the EU legislature did is that they identified use cases, types of use cases for which they deem that such use cases present an important level of risk for the individual rights and freedoms of the European citizens. And they've qualified and classified the different AI systems according to those level of risk, and they have indicated some obligations for these different classes of use cases. And so you have prohibited AI systems, you have high risk AI system, you have limited risks AI systems, and then you have a specific category for generative AI systems and models. But so the EU AI Act is definitely one that is getting a lot of buzz at the moment, and I think what's important to bear in mind is that it does not cater for the liability that can stem from an AI system, and which is, Aurelia, what you just said earlier, something that people tend to ignore is that we have a product liability directive that caters for that.
Yeah, absolutely. Actually, there were two directives that were initially foreseen by the EU Commission to cover AI systems liability. There was a directive which name was the AI Systems Liability Directive, but they then decided to just abandon it, which led to having only one directive to adapt the liability rules to AI system, and it is the Product Liability Directive, which is, of course, much wider than only AI systems, but the new version of the Product Liability Directive that has been adopted in October last year extends the application of the product liability rules to new products, including notably software and thus AI systems, which is why it's related to the digital decade as part of this AI pillar. So the directive also extends it not only extends the type of products that are covered, but also the list of circumstances to be taken into account in order to qualify the defectiveness of the product. And some of the new circumstances demonstrate that the EU legislator definitely had AI in mind when drafting, because they now include notably compliance with cybersecurity essential requirements. So bear in mind the Cyber Resilience Act and the security requirements in the EU AI Act. And the circumstances to scrutinize to qualify defectiveness also includes the effect on the product of any ability to continue to learn or acquire new features after it is placed on the market, which clearly demonstrate that the legislator had in mind AI systems that are capable of evolving during their lifetime. The Product Liability Directive also expands the list of recoverable damages because now it includes also moral damages and loss or alteration of data. And let's say the main objective of the directive is to facilitate the indemnification of victims by introducing a new evidence disclosure procedure, as well as a system of presumption to alleviate the burden of proof for the claimants. So to conclude on our extended versus new risk matrix, the conclusion is a bit like for the Cyber Resilience Act, actually. It's for companies who were already placing on the market products subject to the product liability regime. The directive only, well, let's say, modifies the risk because you have like new rules that will probably impact your national regimes. But for those who were not concerned by product liability, and I think notably about like software providers, for example, or AI system provider, the directive creates a new risk because their product will now be subject to product liability. I think we can now move to the next slide. Yeah, it's about the Data Act, which is quite often a bit overlooked compared to other texts of the digital decade, but it introduces key evolution in terms of access to data. It is a cross-sectoral piece of legislation, so it lays out principles and guidelines that applies to all sectors. And the main objective of this act is to mitigate the contractual unfair terms that impede equitable data sharing and that are quite often imposed by parties that have a stronger market position. So there are two main areas of application for the Data Act that you see on the slide. The first area of application is access to the data that are generated by the Internet of Things. The Data Act basically provides that connected product will have to be designed and manufactured in a way that empowers users, that can be businesses or consumers, to easily and securely access, use, and share the generated data, the data generated by the use of the connected object. The regulation also sets out a list of presumed unfair data access clauses that, for example, could prevent the Internet of Things user from accessing or using the data that have been generated by the connected object during the period of the contract. So this is the first area of application of the Data Act. And the second area of application is a bit like completely different, but they are still in the same act. So it's the second part of the act is really dedicated to access and transferability of data hosted by cloud providers. Because of course, I mean, it's a key issue, and a lot of our organizations face this challenge when they want to change cloud providers. They have a lot of issues to access the data and just get them back and then get them uploaded to another cloud system. So the Data Act provides for obligations of cloud providers to allow their clients the freedom to change providers. And how so? By providing for technical interoperability to retrieve the data. And the Data Act also says that the provider will no longer be able to apply a transfer fee. And the Data Act also has a complete set of mandatory provisions that have to be included in the contracts to ensure between cloud providers and their customers to ensure a smooth transition from one provider to the other at the end of the contract. So those are the two main areas of application of the Data Act. And I guess that at this point of the webinar, we want
to the sanctions, I guess.
Yeah.
If we move to the next slide, and I think it's actually one of the questions that we just received in the Q&A, actually. So that's very that's very timely. So of course, under all of the, and we haven't listed all of them because that would be a lot, but under all of these different texts, you have, of course, penalty regimes, administrative sanctions. What's interesting to see is that you have two types of texts. There are texts that are prescriptive in terms of the sanctions, and they are very much fashioned in terms of the structure of the sanction around what was done for GDPR. And so you have that for the DSA, the GMA, the AI Act, but you also have texts that are not prescriptive in terms of the sanction, and actually, just say that it's up to the local member states and the local authorities to determine what are going to be the sanctions. That is the case, for instance, for DORA. I think that aside from, the sheer amount of the numbers, which is, of course, very important, what's very important to bear in mind is that those sanctions are cumulative. And I think, and it's been mentioned also in the Q&A, by the way, and we're going to talk more about that, but there is a lot of overlaps, and a lot of the texts are intertwined with one another. And so it effectively means that you could be both in breach of, for instance, GDPR and the AI Act at the same time. Not necessarily for exactly the same obligation, because that would be a different issue, but you could breach two regulation or three regulation with one AI systems, for instance, meaning that you could have cumulative sanctions. So, of course, in terms of, you're all risk managers. So in terms of risk exposure for the company, that is a big shift compared to what we had previously in the tech sector. But let's move forward, I think, and if we go to the next slide.
Yeah. So really, thanks so much, Jeanne and Aurelia, for this description. But I think that the feedback, and I know that you really aimed to simplify and make all that accessible, because as you probably mentioned, if we want to get sleep early, I mean, we just have to dig into the text by itself. All that looks relatively complex. And you also highlighted that some of the texts are probably not known enough, not identified enough by the companies, and that's something which we need to alert, and thank you for putting that into light. But all that looks extremely complex, extremely intertwined, and therefore, how can we get organized? Can you help us, guide us on how to manage all those different obligations together?
Well, yeah, it's a lot to in a 2 years period. But first of all, know that you're not alone. Everyone is struggling, including the lawyers. And the good news is that there are common features across the digital decades. And I think this is something that was mentioned in the Q&A. This will actually help you achieve compliance and mitigate risk, because as I just said in the Q&A, there are some overlaps, but all those EU regulations, they still have somehow a coherence, and they are meant to respond to each other. So in many cases, when there are overlaps, they direct to the other regulation that prevails, and you do that so that you do not have an obligation twice. It's not 100%, but for a lot of obligation, it's quite coherent. And also, if you already have a strong sector-specific or product-specific regulation, this will also probably help you.
It seems that we have an issue with sound for Aurelia, so I'll just take over. So the good news is indeed that there are common features that pervade throughout the legislative package of the digital decade, meaning that you can organize and make sure that you aligned all of these texts together. And especially since if we take the example of notification requirements or transparency requirements, we can see that, they are relevant for a lot of the text. And what we want usually our clients to avoid is that they kind of look at this text in silos, and that they have to kind of do again and again and again and reopen their internal processes in order to cater for the different transparency requirements or the different notification requirements. So having a siloed approach, the risk is that you're going to have to kind of knit something and then go back and then go again. And so it's very important that you have a holistic approach. Aurélie, I think you're back.
Yeah, I'm back. Sorry about that.
No worries. I tried to jump in, so I hope I didn't say any.
You basically have, I mean, there are 7 features that you will find across the scope of the digital decade. First of all, there is transparency. Well, depending on the tech, this will mean like clear communication about data usage and data processing, understandable and very precise technical documentation on the products and the services that you're providing. Then second common feature is about notification. For all the cybersecurity pillar and for the GDPR, you have obligation to report on cybersecurity incidents and vulnerabilities. There are some variation depending on the text, but still, I mean, you have like a common, let's say, common obligation that you can leverage on to avoid duplication of internal processes. Same for product-related regulation. You probably have already some proceedings in place with some obligation to report incidents affecting the safety of the product. So you can also leverage on these to achieve compliance with the digital decades. Risk assessment is a third common feature, and I think most of the companies got kind of like accustomed to that with the GDPR, doing this exercise for personal data processing. And the digital decade is just multiplicating the number of risk assessment that you will need to perform to identify and mitigate potential threats in the digital landscape. But more or less, the exercise is the same. Then you have risk allocation, and this circles back to contractual terms to allocate the risk between stakeholders. As we'll see a bit later in the webinar, some of the digital decade legislation are very prescriptive about the content of the contracts, and some are less. Then you have governance, and again, we'll see that a bit later, so I will not go into too much detail, but a lot of techs have a governance pattern in it. Then you have security. This is no surprise. Security almost hits 100% score across the digital legislation. And some laws focus exclusively on this and have very specific obligation. Of course, cybersecurity legislation. Some have a bit more principle-based security obligation, but still. And then finally, the seven let's say, common features is about data sharing. The general objective is to ensure fair access, as I mentioned before about the Data Act. So to conclude on this, we're not saying that you will be able to have a one-size-fits-all incident notification process, a one-size-fits-all set of technical documents for your products, a single standard procurement contract, including all mandatory clauses in the digital decade. But still, I mean, it will be false and misleading to say that, but the common feature will definitely help you speed up the compliance process because there is a common methodology.
I mean, I think that's really the point that you highlight is the fact that we should really focus on different topics and try to address them globally for all the different regulations in order to make sure that we have alignment in our organization on a specific topic. So I think it's a very interesting and useful advice. But beyond those commonalities, so how do we connect to our specific risks?
So hopefully, I guess everyone is a bit reassured by the fact that, these common grounds exist, which is, I guess, after our, the list of all of the tags and all of the obligation, which I think can be a bit much for anyone on this webinar. I think you're right, Philippe. It's quite important not to have a siloed approach, and it's quite important to look at how do we operationalize that, because it goes beyond just looking at the common themes. It's okay, there are common themes, but then how do I do that? And if we can go to the next slide, and I'm not going to say that there is, as Aurélia was saying, there's no magical recipe about it, but what we can share is, what we've been doing, and potentially it will help for your own organization. What we do is that the first step is, of course, to identify which of the digital decade techs are relevant to you, and not all will be. Not everyone is concerned by the DSA or the DMA. Not everyone, is a financial institution that is governed by DORA. So the first step is, of course, to understand what is applicable to your organization, whether directly or indirectly. Because, for instance, if you're an ICT service provider, you may not be directly regulated by DORA, but you will definitely feel the impact. And so this is a qualification exercise, and this is something that I'm sure many of you have done, potentially for some of those directives and regulations, but maybe not for all. But I think, again, it's important to have that global picture in terms of all of the digital text that may be applicable to you. And then once you've identified those, the idea is to look at the obligation, understand the legal requirements that are going to be applicable to you, and try to categorize them in light of the common themes that Aurélia just mentioned. So if you can just relate sort of those obligations to these big themes that Aurélia just identified. And then there is a question of timeline. As Aurélia mentioned earlier, you remember the timeline of the different texts. All of the obligations are not going to be applicable or enforceable tomorrow. You have 2 to 4 years to implement all of these. And so I think it's very important when we look at those obligations to take the timeline of enforcement very much into account, because on the basis of that, you're going to be able to identify your gaps, and then you will be able to draft and to have a kind of an action plan with the obligations, the category to which they relate, and the timeline, which enables you effectively to, first of all, prioritize depending on enforceability, and two, make sure that you don't reinvent the wheel, and so that you look at all of these obligations that pertain to the same theme in just once, and not 35 times, depending on each and every directive and regulation that you go through. So hopefully by doing that, your remediation process, that will be more or less important depending on, on whether you're highly regulated entity or not, depending also of your risk appetite, will hopefully make it smoother in terms of the implementation. And I think that what's also interesting and what we wanted to do as part of this webinar is, aside of that process and, of thinking about it by themes and not by directives or regulation, the idea was also to look at the kind of common controls that we identify throughout the regulation, in order also to be hopefully to be reassuring to the different organizations that are here today. What we're seeing by doing all of these compliance programs is that the type of controls that are implemented in order to comply with the different obligations that are set out in these different texts are very much similar. And we wanted to potentially to focus on two big types of control that we're seeing, and those are contracts and governance. So if we we can even move 2 slides, because I've already talked about this actually. If we move even to the next slide, Philippe, I think we wanted to talk about contracts first.
Yeah. So, I mean, of course, we understand contract is important, but why and how can we manage those contracts, and what are really the key topics that we need to focus on?
So contracts, and I don't say that because I'm doing contracts most of, day in, day out. But contracts are actually very important in your compliance process. And it's one of the most effective control that you have right now. And so it's more actually than just the contract itself. It's actually the whole procurement process that has always been important. But with the new regulatory landscape that we're seeing, with this new avalanche of text that Aurelia described at the beginning, the procurement process is becoming really key. And why is that? It's because it is at the procurement process when you're sourcing, a new solution, or you're providing a new solution, you're selling a solution to your clients. It is very much at that time that you're going to be able to first understand what are the texts of the digital decade that are applicable to that solution, whether you're purchasing it or whether you're selling it. And it's also very much at that time that you're going to be able to understand what you're purchasing or selling and identify the risks that are associated with that, in order to identify the controls and the mitigations that you're going to be able to put in place to actually mitigate those risks. And it's very much a stage where you're able to gather a lot of information, especially when you're procuring a third-party solution. If we take the example of AI, you want to, I'm sure, your each and every organization on this webinar is purchasing AI systems left and right at the moment. It's very much the focus of a lot of organizations. And so, there's a lot of pressure on the procurement process, but it's very much at that stage that an organization can, through something as simple as a procurement questionnaire, ask the right question in order to understand, what are you purchasing? What type of AI system? Is it going to be a high-risk AI system? Is it going to be a limited risk AI system? Is it a generative AI system? Does it mean that I will need to have a number of, contractual remediation in my contract with my provider? Does it mean that, I need to implement a new policy internally because I want to avoid my employees doing not very intelligent things with that AI system, and so I want to frame the use of that AI system internally. So you see how this, thing that we know and have been, doing for many, many years, which is just procuring third-party solutions or selling third-party solution, can very much become kind of a pivot in terms of your risk identification and risk remediation, looking at the overall framework of the digital decade. And hopefully, this is something that you already have. You already have potentially procurement questionnaires. You already have cyber assessments questionnaire, potentially, privacy assessments questionnaire as well. So this is not about reinventing the wheel and having to create like a whole new set of artifacts. It's more about looking at what you already have and maybe adapting those so that they cater for the new obligations or extended scope of DORA, of NIS2, of the AI Act. So it's very much building and weaving into your existing sets of processes those new and extended risks in order to make sure that you cater for them. And I hope that that is a reassuring message for everyone on this webinar. It's very much about building on what you already have. It's really not about reinventing the wheel, especially if you want to ensure adoption. We also wanted to discuss about, how do you go about in your contract? One of the things that all of you are going to wonder is, I have all of these different texts now that are applicable to the services that I'm selling or purchasing. What do I do in my contracts? Do I change all of my templates or not? And what's important here to bear in mind very quickly is that we have two types of texts in the digital decade. There are the prescriptive texts that basically tell you in your contracts, you need to have A, B, C, and D. And then you have the non-prescriptive texts, which have a whole range of obligation, but they don't expressly say whether those obligations need to be put into the contract or not. And so there is definitely a decision to be made whether, again, you're purchasing or you're selling, of putting aside the prescriptive text. What do I do with the non-prescriptive text? Do I have to put something in my contracts or not? Or do my existing kind of compliance with law clause is sufficient? And this is something that we will discuss a bit more later, but our recommendation is definitely to put something into your contracts, but we'll explain that a bit later. One other thing around contractualizing regulatory requirements that is important is that, remember the timeline that we had earlier, not all of the texts that we're talking about are enforceable. Some of them are applicable and enforceable. Some of them are applicable but not enforceable. So how do you go about it? Because you're contracting every day. And so do you mean that you push until the text is actually enforceable before you modify your contract? Or do you proactively include some things in your contract? If you're on the provider side, it may very well be that you don't really want to include in your contracts things that are not enforceable yet. And if you're on a client side, of course, you will tend to want to include them right now. And I think that the landing position that we're frequently seeing, and which makes sense in order not to reopen, the contracts that you're negotiating right now, is to actually include the regulatory obligations in your contracts, but to stipulate that those obligations will only apply when the text becomes applicable. And also maybe, agree to potentially be able to revisit the clause later on, because one of the issues that we have right now is that we're waiting for a lot of guidelines from the European Commission on how to interpret or how to operationalize texts, or simply because for some directives we don't have the implementation legislation right now. So you can see how that is a bit a time of uncertainty and unsettling, but definitely we do recommend our clients to still anticipate and proactively already include in order to limit the remediation exercise that they will have to do on a contractual basis. If we move to the next slide, Aurelia, maybe you can talk about why we think it's important to put things into the contract.
Yeah, sure, because all those texts, they can be interpreted in divergent ways, and typically the customer of IT services will have a fairly broad interpretation of the text because it's the safest position, whereas on the other side, the software provider will favor an interpretation that is consistent with their existing practices. And they will basically say, so we don't need to put that in the contract because anyway, our standard practice is already compliant with the regulatory requirements. So of course, depending on who you are, you will have different interests. So if you're the customer, well, to maximize your chances to have your version of the clauses to apply and to contractualize regulatory requirements, you need definitely to be proactive, as Jeanne was mentioning. And this means that in the context of contractual negotiation, if we can just move on to the next slide, please. You need to have an aligned position between compliance, IT, purchasing, operational team that is actually reflected into a standard set of clauses that you will be able to push right from the beginning of the RFP process, like Jeanne was mentioning before, because otherwise the chances that you can reflect actually regulatory requirements in the way that you wish to in your contract will be limited if you arrive at the end of the process and you say, well, I want to add that it's going to be a bit a different negotiation and probably a bit more difficult. I see that we have very few minutes left, so if we can maybe move on to the next slide. Yeah, so the contract is a key instrument to allocate the risk, obviously, and it's also important to bear in mind, I think this relates to a question that was asked in the Q&A, that a regulatory breach can be used to demonstrate a contractual breach and a breach of duty of care or a product defectiveness that will expose the company to contractual and extra-contractual liability, in addition to the administrative sanctions. This is already the case for the GDPR, for example. I mean, let's imagine a service company that is sanctioned by a data protection authority on the ground of insufficient security measure. This means that this decision could then be used by the customer of this company to demonstrate a breach of the data processing agreement, or by the affected data subject to demonstrate a breach of the duty of care. And of course, I mean, those claimants will also need to demonstrate that they incur direct damage resulting from those breaches. But still, I mean, it's really key, I think, to bear in mind that compliance with the digital decade legislation is not only about managing your risk of administrative sanctions, it's also about managing your exposure, your overall liability, and of course, reputational risk. And with the multiplication of legislation, this inevitably increases the risk exposure that you have.
Well, so really, thanks to what you have just described, which probably is very, very helpful because we were really, really very anxious. So we have now a proposed method. We have a framework. You have clarified the contractual environment, but probably under all that, what we probably need is to have some governance to coordinate all those different aspects. Can you tell us a bit more about that?
Of course, thank you, Philippe. So of course, governance is completely key, and it's like my favorite topic. So I will really try to be very quick. Having a governance framework for digital liability is, of course, a must-have. It is something that needs to be, transversal to the organization. It's not something that is specific to legal, to risk managers, to compliance. It's something that where a lot of different stakeholders within the organization need to be involved. And of course, that governance is, why is that important? It's important because that governance is a structure within your organization that will help you identify and mitigate the risk. And we're all about identify and mitigate. It's not about eliminating the risk, it's about identifying and mitigating. And if we move to the next slides, you will see that, so we have like different steps that we recommend organization to go through. So we had initially included a fictional case study to illustrate, what governance could be implemented, and to show, mainly to illustrate that with many organizations that we're seeing, and I'm sure it's the same for everyone on this call, you already have governance. It's not something, you don't exist in a vacuum of governance. You have a governance for GDPR, you have governance for anti-bribery, money laundering, for export control, for product development if you develop products. So, as in this fictional case study that you have in front of you, you have an existing governance. What you will need to do, again, going back to my point about, weaving into your existing processes those new texts, it's exactly what you will need to do as well in terms of your governance. So you're going to have to build additional bricks or to modify your existing governance in order to make sure that you cater for the risks that we've all been going through. And so for us, there are like 6 steps to good governance. It's not rocket science. It's something that I'm sure each and every one of you has already done under various regulations. But so we took the example of AI governance because it's one of the main governance that we're building at the moment, but we're building it very much by like developing what already exists, for instance, for GDPR, and kind of building on that GDPR governance in order to cater for AI. I think we wanted to focus, and I'm mindful of the time, on how to set up, in a very pragmatic way, a governance structure. And by that, I mean the committees that are going to be helping you to identify the risk associated, for instance, again, with AI use cases, and then how to mitigate and thus to validate those use cases in order to ensure AI adoption. And so what you have in front of you is just one illustration of something that can be done and that we've done for some clients. And what is interesting to look at is to show that it kind of fits into the existing structure of the organization. So your CISO, your general counsel, your DPO already exists. It's just that you bring them all together into an AI committee. And that committee is going to be looking at the use cases and validating the AI use cases. And in order to make sure that they have the relevant information, one way to structure it is very much like what we did, for instance, for GDPR, having within the respective business units or entities some GDPR privacy champions. You can have AI champions that sit at the business unit or at an entity level in order to make sure that they're very close to the business and to the projects, and that they kind of, gather the relevant information, explain the processes also to everyone, to the operations and to the business, to make sure that they adopt the processes and then feedback the information to what we've called very pompously the AI Center of Excellence, which is nothing more than a committee. And if we move to the next slide, you will see that that committee is going to have kind of a three main focus. They're going to look at, use case approval of AI systems. So for, again, identification of the risk, mitigation, and giving the green light, ongoing monitoring, incident resolution, of course, but also very much around training and knowledge to make sure that all of the processes that they create and implement are actually followed and adopted within the organization, which is very, very, very important, because it's all well and dandy to have processes. It's much better if they are actually adopted. So I think if we move to the next slide, this is just, I don't need to comment on this. This is just to give you a set of example of the type of artifacts and deliverables that are built for our clients right now in order to cater for AI risks. Again, it's just to give you an example, and you will see how all of these, I'm sure, kind of ring a bell, whether it's for AI or for something else. Again, having a procurement questionnaire, having model clauses, having a policy. This is something that you've done 100th time. It's just about, tweaking it in order to cater for the different digital decade texts, or potentially building additional artifacts. But again, very much weaving into what you already have. And so if we, Aurélia, maybe.
Yeah, maybe let's just conclude by saying that, well, you have already product and service compliance governance, and you just need to leverage on this to control your compliance with new product regulation, notably the Cyber Resilience Act and the EUAA Act. You can leverage on your existing notification policies and procedures internally set out for the GDPR to comply with NIS2, Sierra, and DORA, if you're subject to DORA, of course. And you can also use your existing governance structure to avoid the multiplication and the dilution of responsibilities within the organization. So yeah, the idea is to try to have a coherent and integrated governance and to avoid duplication. And you can do that and still comply with the digital decade.
Thanks so much, Aurélia. What really you highlight is the fact that for many companies, the development of AI applications is quite significant, and it's very important, the governance aspect, to make sure that you have an overall view about how AI is developed within the company, how it's being used within the company, what are the different elements that are applicable for the use of this AI in your company. That's one of our major challenges as risk manager, to make sure that we have a good visibility on that. So governance is absolutely key, and we'll probably come back to that during the question going forward. Having said that, when we talk about managing insurance, we talk about mitigation, but we could talk also about transfer. So therefore about insurance. And of course, in your position as lawyers, can you probably alert us of what are the tipping points, the point we really need to focus from a legal standpoint on our insurance contract? And is there maybe a temptation from insurers to maybe exclude AI risk in the policies, and how can it be illustrated or demonstrated? So maybe Alexis, can you provide some insight on that?
Yes, thank you, Philippe. I will try to be as quick as possible so that we have some time for the questions at the end of the presentation. I hope you have some energy left after this dense presentation on the digital framework to hear a little bit about insurance. So after hearing that presentation from my colleagues, you may be wondering if insurance can be of help, and if these new digital liabilities and risk can be covered by insurance policies. And we will see that, as Philippe mentioned, there are a few issues, legal issues around that. The first issue is the question of the insurability of these risks from a legal standpoint. Most of these new risks created by this regulatory framework and by digital operations are insurable, but you have to know that not all of them are insurable, so the transfer is not possible for all of these risks. Criminal sanctions are generally considered as being not insurable across Europe. For administrative sanctions, it's a little less clear. The situation is not perfectly clarified on the legal side across Europe. In most countries, courts or legislators have not definitely set their position on that, but probably in the end, eventually what the conclusion will be is that in most European countries, administrative sanctions and fines related to non-compliance with the digital regulatory framework will not be insurable. We have put on the slide the results of a study that has been conducted by DLA Piper with the broker Aon in 2020 about the insurability of GDPR fines across Europe. And you can see the countries in dark green are the countries where most likely GDPR fines are not insurable. You can see in light green the only two countries where GDPR fines, when the study was made, were likely insurable, and in the other countries in the gray area, the legal position had not been defined at the time when the study was made. The study dates a little bit. It was conducted 2020, but it remains mostly accurate. And it was conducted about GDPR fines, but it's transposable to all types of sanctions because the legal issue is exactly the same. So eventually, the position of most countries will set on the impossibility to seek coverage for administrative sanctions. The good news is that for the other risks, you can seek coverage, and these risks are insurable. This is the case especially of cyber ransoms with some limitations that we mentioned on the slide. And for all other risks, including especially liability risks. So if your company does not comply with the regulatory framework and causes damage to a third party, this liability claim can be covered by insurance and is legally insurable. If we can move to the next slide. The second issue that we see on this topic is once it has been established that most of these risks are insurable from a legal standpoint, the next question that arises naturally is whether you can find clear and available insurance coverage on the insurance market. And the main issue, I think, in that field is that insurance in the digital area is still relatively young compared to other insurance products, and the market is not yet fully mature. Insurance products are not yet perfectly defined and delineated, which can be a source of lack of visibility and predictability for insureds. This problem exists even for more mature insurance products, such as cyber insurance, where it appears that some coverage is still provided through silent covers. For example, EIOPA published in 2022 a supervisory statement on the management of non-affirmative cyber exposures, recommending to national regulators to more heavily regulate and manage the issue of silent covers, what the EIOPA calls non-affirmative cover in cyber insurance policies. The issue with silent cover is that coverage is provided by default by an insurance policy that was not intended initially to cover this risk, but still covers it by default because no exclusion has been inserted. And this is, of course, a source of lack of visibility and clarity for the insured. So, of course, we have a cyber insurance market that is more mature than in other fields, but still there is that issue that remains. Another issue creating uncertainty is the coverage of cyber wars. It's difficult. The consequences of cyber wars are excluded in insurance policies, but in many losses, it's difficult to attribute the cyber attack to a particular person and make a connection to a war. So in many situations, this can lead to a situation where the insured has a lack of clarity on whether he will be covered after a cyber attack. And last but not least, AI risks. In that field, of course, the market is not mature at all, and we see that a few insurers have developed specific insurance products for AI, but most of insurers are in an observation phase and have not yet amended their insurance policies or have not developed specific products or included AI exclusions in their insurance policy, which means that most of the coverage for AI liability is still provided through silent covers. But we are starting to see a few insurers who are moving forward, developing specific insurance products, and some inserting AI exclusions in their insurance policy. And I wanted to mention this in the presentation. We're starting to see a few broad AI exclusion appearing in the US. I have two comments about this. The first comment is that artificial intelligence is developing at a very quick pace and is becoming a more and more important part of the economy. So that's my personal view on the matter. I don't see how insurers could stay out of this market. So there will be, in my view, two paths. First, either insurers keep AI covered in their insurance policies and do not insert these exclusions, or insurers, and we'll see in the future what is the path that will be chosen by the insurers. The second path will be for insurers potentially to insert these broad AI exclusions in their main insurance products. But then if the market does this, they will probably have to develop specific AI insurance products to cover AI, because again, I don't see how insurers can stay out of this market with AI becoming more and more an important part of the economy. And the second comment is more legal comments on these exclusions. It may be for insurers because there is a lot of uncertainty around AI and the risks created by AI. So it may be an easy solution for insurers to insert an exclusion, but the implementation on the practical side of these exclusions leads to legal questions, because and the main question is how do you define artificial intelligence? Even in the regulatory text is not perfectly clear. And how do you apply these AI exclusions when you cannot define what artificial intelligence is, and when all the experts do not agree on a definition. So this would be the main issue, I think, with these exclusions. Even more in countries like France, where coverage exclusions are heavily regulated. In France, coverage exclusion can only be valid if it's perfectly clear and precise. So I really wonder whether these broad AI exclusions will stand under French law. We haven't seen yet, of course, any court cases, but it would be interesting to follow this. So we'll see how the market evolves, what path the insurers will decide to choose, either insert these exclusions or keep AI covered in their main products. So just to sum up on this, insurance coverage is available on the market, and most of the risks, as I mentioned, are insurable. But for the moment, there's still some uncertainty around the coverage provided on the insurance markets. And it will be interesting to see how insurance policies evolve in the future with the development of digital technologies and artificial intelligence. Thank you very much for your patience. And,
yeah, many thanks, Alexis. And needless to say that we have seen in other opportunities that sometimes when the insurers tend to clarify coverages, usually they clarify with a level of exclusion. So I think that you were probably right in highlighting that the scope of that exclusion is probably still to be defined and maybe unclear from a legal standpoint. So many thanks for that. So we will open the floor for questions. I see that there is already some questions coming to play. And so if you have other questions, please use the tool to use that. We have a first question, which is framed as follows. So, given the topics covered by the regulations, directive issued or to be issued under these 5 pillars, so I see that your graph has been really well appreciated. Am I correct to assume that there are overlaps, mainly in reporting? This increases the burden for companies and complexifies the ability to be compliant. How is this addressed by EU?
So there are some overlaps, but some are directly addressed in the legislation. So for example, the EU AI Act and the Cyber Resilience Acts point to other existing product safety regulations, and there are some overlaps that are not directly addressed, which is unfortunate. And it's the case, for example, of all the notification requirements under the Cyber Resilience Act, NIS2, and the GDPR, for example, which are not harmonized. So we hope that in practice, there will still be some level of harmonization. Jeanne, if you want to add on this.
I mean, I completely agree with you. I think the concern, of course, it adds complexity for sure. But this is also why the recommendation is not to look at those regulations in silo, because in the end, I think, to talk very plainly, you're not going to put in place 10 different incident reporting mechanisms. You're going to land on, depending on what applies to you, you're going to land on a couple. So there are going to be some decisions that are going to have to be made internally. And I don't think for the time being that the EU is going to just give a guide in terms of how to articulate those different mechanisms. So the reality, I think, is going to be that it's very much for the different organizations to decide how they're going to reconcile those different texts, which is not, I guess, the answer that you want, but I think is the reality.
Yeah, and as far as FERMA is concerned, we have already pointed out the necessity to reduce the reporting requirement, and we have advocated for introduction of a single point of entry system in order to be able to make sure that the declaration is done once and circulated across the different legislations organizations, so that we try to simplify and increase the speed about notification towards the overall organizations.
Yeah, I guess also, Philippe, I think efforts are also made in terms of the communication, also between the different supervisory authorities, especially for cyber incidents. So they talk more to each other, which also helps. And I think the other thing the point that you're raising, Philippe, which is very important, is that the digital decade also increases very much the importance of public affairs and involvement in, how those texts are actually drafted and potentially amended. And so we're seeing a shift within our clients where the public affairs department or the people that are in charge of the digital decade are often have the public affair background, which is quite interesting.
I have another question about AI Act and the Cyber Resilience Act. So do you think that AI Act and the CRA provide a basis for third-party damage compensation claims, or can these only be found under the national concretization of the Product Liability Directive?
So on this one, I think it's a bit of the mechanism that we explained, that if you have an administrative sanction, then it will be easier to initiate action before the national competent court. But to address the question directly, no, you will still need, the claimants will still need to initiate action and use either a contractual ground, a tort ground, or product liability ground to demonstrate that they suffered a damage that results from the breach of regulation, and there is a causal link between the two.
Okay. One new question. So I think you maybe answer that in practice, but maybe just to answer that, can you please illustrate with some concrete examples how this digital decade impacts the supply chain risk management? As an organization, could my liability be more at risk, for example, if I have not sufficiently assessed my providers, or how much they meet on how much they meet those obligations?
So the short answer is that it definitely directly impacts your supply chain risk management from my perspective, because irrespective of the text we're talking about, it always exists around all of the product lifecycle or around all of the AI system lifecycle. So meaning that the burden of the regulation doesn't sit with only one organization or one stakeholder. If we take the example of AI, the provider of the AI system is regulated, the deployer of the AI system is regulated. And so it means that in order to be compliant, the whole chain needs to be compliant. And there are dependencies between those, the compliance of the different stakeholders. And we provided in rating also examples for DORA and for the Cyber Resilience Act, but whichever way you're looking at it, it goes back to having the whole chain that needs to come together in order to ensure compliance, which is of course one of the main complexities, because controlling your supply chain, there's contracts, of course, and there are clauses that you can put in there, but effective control is difficult to make sure that from an operational standpoint the measures are actually implemented. So we are seeing a very big increase in discussions around audit, around certifications, around demonstration of compliance in order to facilitate that control of the supply chain. But it's a very complex point to address, because there is the contract where it states, and then making sure that it's actually implemented.
Okay. I have a simple question for you. Now that we have really seen all those different regulations, directive, and the different exposure, what is, according to your experience, the most important risk today, and what is changing? Simple question, simple answer.
Very difficult question. What's the most important risk today? I think, from my perspective, but I'm biased because I do so much AI, but I think that lack of governance is the most important risk within organizations. Because whether you look at cyber, irrespective of the pillar you're looking at, it is the lack of governance and effective governance within the organization that leads to the materialization of the risks. So I think if your governance works well, and that you have, clear processes that are implemented, then you mitigate a lot of your risks. So for me, if we look, completely holistically, governance is both the most important thing and the biggest risk if in case it lacks.
Okay, and also something which is, extremely rich in your presentation is when you describe the deployment of those different regulations and directives across time. You probably highlighted, Aurélia, if I remember well, the fact that the next 2-3 years will be very, very critical to implement those directives and regulations in practice across our European countries. So my question is more, given that in some countries, the legislative process is a bit fragile and clear, how confident are you that all those different directives will be implemented in practice in our countries? And how can we manage that level of uncertainty and unable to know whether those directives will be applicable by the end of 2030? How can we, do you think it's really a risk and we need to manage that? And how do you suggest we manage that?
Well, you can use, for example, for the NIS2 directive, you can use the existing implementing laws and try to use that as examples of what could be expecting, and also it depends on where your company is established, because of course, you could have you could be very well be in a country where there is no implementation for the time being, which means that you can for now just think about how you will do it without needing to do it. But at some point, in any case, considering the other texts for cybersecurity, if you take NIS2 as an example, which are regulations, for example, the CRA, you will need to have some sort of implementation process to ensure compliance to security requirements. As for the product liability directive, I think the point is that this is only adapting an existing regime. So the effort that is required from the member state is not that that high. So I guess we definitely need to prepare to comply to that. And it's more to take into account the fact that the product liability risk will take another dimensions after October 2026, because it will apply to all product placed after that date on the market that's specified in the directive.
Well, I think that we come to an end of this webinar. I really would like to thank really our speakers. This topic is very challenging, and you were able to address that in an exhaustive way, but also you help us to be pragmatic, efficient, guide us in how to address that, give us a good framework. You also give us a strong advice regarding governance, and I think, Jeanne, you really mentioned that it's a key element. So really thank you so much for that, and I hope that thanks to this, all our different auditors will be able to have a better understanding of the challenge and really the challenge that we have no choice but to address, related to the compliance of this evolution and this revolution, if I may say, which is taking place within this EU digital decade. Many thanks, Jeanne, Aurélia, Alexis. It was extremely useful. Many thanks for that.
Thanks, everyone.
Our pleasure. Thank you.